It is so important that we plan out our work ahead of time. When we plan our work and then work our plan, the results are next level. It literally looks like we have access to a crystal ball. What's today's #2 strongest performing swing trade? It's UB, clear as day. This is something that we planned out almost 10 days before the downside took place. Looking at the UB chart, on the 13th, we start scheming. We start putting together this trading plan saying, heads up. This weekend, as in on Saturday, UB, an AI sector project, is going to crash down and we'll have an opportunity to jump in at the 8-cent level. Fast forward, what happened? Our hypothesis played out exactly to the day, to the dollar. We understand the full cause and effect. Meanwhile, the rest of swing traders, the rest of crypto is kind of firing and then aiming after. In the event you're not using this event, you're just getting lucky because this is the driving force. Now, UB was one of 5 possible Bank of Japan unwind crashes. The rest of them kind of held price. This is setting up a market dump at the FOMC minutes, July 8th. So there's plenty of time. And in fact, this UB unwind gives us so much insight on how to prepare for this up and coming discount round. We all recognize that the Fed just adjusted the dot plot vote, right? Previously, there was a lot of rate cuts planned out for 2026. They pivoted from one rate cut on the votes. They haven't verbally supported this, and now they're actually saying, well, looks like we're going to hike in the new dot plot. And we've seen this time and time again. Meanwhile, the Bank of Japan hikes rates. This is setting up a catastrophe, and we can profit off it. Look at all these prior Bank of Japan rate hikes, these giant red wicks to the downside. We're just seeing an appetizer with UB crashing to the downside. That's a great opportunity. That's today's best swing trade. It's up 50%. And we had the whole thing mapped out days in advance from using macroeconomics. This is ultimately Satoshi's secret. Looking at Bitcoin, we can see PPI, massive bearish catalyst. When we start zooming in on the local price action, as we hypothesized, downside would start Sunday as the DXY reopens. Now, actually looking at the DXY, remember how Michael Saylor was in the news saying, we're selling Bitcoin and we're buying bonds. Oh, that's really bullish. What that represents, higher yields in bonds, that's going to show upside on the DXY. This is the strength of the US Treasury, the strength of the dollar in general. As soon as that dot plot dropped, inside our trading group, we released it like, yeah, well, guys, heads up. This was a signal for short traders to enter short trades. The DXY starts rocketing to the upside. Then Kevin Warsh gives his speech and it just continues blasting higher. That's super bearish. This is showing a massive risk off rotation. Now, the DXY just reopened a few minutes ago and it hasn't started a monster spike to the upside yet. Albeit, this can progress through into Monday. The DXY gaining more strength. In today's video, we're going to go through grabbing some of your guys' picks, correlating it with macroeconomics, and really setting up the tactics specifically that we're going to need. Here's the thing. This isn't just going to sit there at these extreme discount levels like we just got to see a clear example of on UB. This is going to happen rapidly. Now, in order to determine what level we should pull the trigger on, this didn't even wait for the Sunday DXY. It just fell down to that durable goods support and resistance established at a prior macroeconomic level, just like on Bitcoin. When we were looking at all those PPI prints, notice how when it came right up to another PPI resistance, that data came out, showed high inflation, then it dumped. We see this time and time again. The support and resistance levels are established by liquidity providers, by institutional investors. So once we can find, hey, this is where the big dogs are buying UB, we can get ready to pull the trigger instantly. So this trading plan was made almost 10 days in advance. It's linked in the description of this video, and it ultimately makes us look like we have a crystal ball. We're like predicting the future at a spooky level, and there's cash money on the table. We've gone through and reviewed all of our posts that we made, whether it was an entry or it was just on the sidelines waiting for macro data. We trimmed off the degen low caps. Like, do you guys remember Moltbook? Facebook bought that. AI agents under 15, 20 million market cap. Those really brought down our averages. But as you can see, even without using macro timing, as soon as all these projects came on our radar, they have relatively good performance. Now, it's important to track this data. Let me show you the time that we're looking at here. That's from February 6th, which set up that huge siren swing trade. That was our best performer. And that was right until that PPI. We had a lot of swing trades ready in case that came in bullish. We could have caught a rocket leg up, but they halted the market right there. And it shows us ideal take profits. What's our average performance for bear markets? Now, people are constantly wondering, when's the ultimate leg down? When's the bottom going to fully be in? We need a bit more clarity from the US Fed. Here's a scenario that makes a ton of sense to me. Just like this February 6th to May 13th bear market leg, when we were getting all these rallies, when we were getting all these swing trades, Tau's doubling up, etc., we get one of those in correlation with this downside on July 8th. So it does a hard reset. Bitcoin comes down to 50, 40,000. Then we start consolidating until the US Fed hikes rates. It's just a scenario. It's not set in stone. It can change, but that would give us another 120-day bear market swing trade time window, and then a true market bottom would be in. UB was one of the early ones. The other trading plans we have in VIP, there's like 4 or 5 of them waiting for this downside from the Bank of Japan carry trade. This is all projected to happen at the FOMC meeting. So here's how it all goes down with macros, just showing all this overlapping stuff, really driving it home. Those red indicators, that's when the Bank of Japan hikes rates. These green emojis, that's an FOMC meeting where they actually do a dot plot vote, right? This last dot plot vote, super bearish. We basically moved 2 rate cuts in the wrong direction. Then what's going to happen is they'll release an FOMC minutes. Let's clean up this chart, which shows what the Fed was talking about behind closed doors. Now, in the event we don't get a dump on the day or on the weekend like right now, history shows that we'll get a dump at that FOMC minutes. That's when the downside will really start to pull down, and vice versa. This is when we get a lot of bullish upside. Last year, April 8th, key date, April 8th this year, right here, also a market bottom. And connected to a low on this target project, Velvet. Now, Velvet was in a trading plan for the government reopen inside our group. It's a DeFi project that's actually having a lot of upgrades right now. They're launching Velvet X. What this does essentially is it tracks down tokens, it tracks down narratives online, tracks down whale wallets, and puts together a trading plan and automates trading balances for institutional or retail or offices. Here's an interesting article done by a university studying total value locked actually not having a large impact on cryptocurrency return. Something to keep in mind as we jump over to Velvet Capital on DeFi Llama, just looking for all this additional information. What can we see? They're actually staking a lot of Velvet on chain, which is how they get access to Velvet X. When Velvet X is released to the public, that can be a big trading signal to the upside. Taking a look at Lab. Aside from Siren, one of the hugest runners this year, we get the initial rally from 70 cents up to 370. Consolidation underneath, and then what happens, that initial spike gets flipped into a new support level. That's exactly what we saw on the Siren breakout. It's a super bullish setup. The first rally being the labor market print goes from 10 to 40. Now, Velvet had a way bigger move, depending on where you time this spike. From 4 to 180, that's reasonable. That's in line with Lab. That's in line with Siren. But going all the way back to the labor market print, it's like 18x. It's a huge rally. In the event we can get back on top of 60 cents, super bullish for the project with the incoming durable goods print and the jobs report. Jobs reports have been extremely bullish for this project. Right there, jobs report, rally. Right here, jobs report, and then a CPI, rally. So this is a potential monster runner candidate that we haven't validated quite yet. Good chart formation, looks pretty bullish. So with UB, we really bring it home. What else, using our macro insight, is going to be set up for a solid swing trade entry? We know Tau consistently aligning with labor market prints. When we add the jobs reports onto Tau, we can see 100% of the time, no exceptions. How wild is that for all you Tau traders? Every time it gets in these repeating trendline downtrends, Friday, the labor market print comes out. By that Monday, hence Sunday DXY reopening, which is happening right now, Tau rockets to the upside over and over again. Therefore, we can reevaluate Tau at the July 2nd labor market print. Now, there's that incoming FOMC meeting. Divergent macroeconomics. We might want to wait this one out. August, right around August 6th, we start scooping Tau up at a low. Who knows? It's already starting to establish a new low. Let's clean this chart up. It already started to establish a new more low. It could create like a descending triangle, come back down to 120 on August 6th. So we want to wait and time our entries. That way we have a crystal ball. We're calling it 10 days in advance. In this case, 30, 45 days in advance. And what's going to happen time and time again, we're just connecting so hard from using macroeconomics. So there's one good swing trade up and coming. Let's take a look at BSB. This was trending off of CPI. The CPI came out actually bullish. PPI was bearish, but CPI was great. It was trending lower. Now, something that we recognized was BSB. We just linked that right in the trading plan, right in the CPI evaluation, excuse me, sliding scale. Every time CPI comes out, doesn't matter if it's bullish or bearish, hot inflation or cold inflation. For whatever reason, this RWA project is running. Now, that's a trend that we've noticed inside our VIP group because we track all these macros. When it's super bullish, there goes AI sector. When it's lukewarm, not really that bullish, there goes RWA. And they've been kind of going wax and wane. It's either the AI sector going for it or RWA. And we can really correlate that with the incoming macro data. So for anybody who's in BSB, let's say you started the trade at 30 and then you added on here and now you're like, great, I'm stuck on the add-on. This is still a hold for CPI next month. It also performs well with bearish conditions. Look at the chop, look at the range on this. At any moment, this project is ready to pivot to the upside. With River, and I explained this to a group member who was saying, I just shorted AVAX at the dot plot vote. DeFi projects and RWA projects, specifically new age ones, have a much better chance of holding up during a Bank of Japan carry trade event because they have their own liquidity. They're built around liquidity. In fact, when we look at AVAX, you guys remember the May 15th trend line, one of the most pivotal events in all of crypto. Notice how AVAX was able to trend above that, which is very rare. May 15th trend line's here. It had a large period of time above that because it's DeFi. It handles its own liquidity. So it can have an adverse reaction to bearish conditions. No, I would definitely not hold River. And extreme volatility is something that comes with this project. When we get these huge swings, I mean, these can go in both directions and it can be kind of stressful, but what we want to avoid is hot potato, swapping out of this and into a new project. This has just got time to percolate. Plus, the Fed said at the meeting, we're continuing to maintain ample liquidity. So this is good to go. The key is when we're putting together all of these trading plans over the past bear market consolidation, macro insight is a key. We have to overlap our technical analysis with macroeconomic insight in order to get clear reads on where we're going. How's the Bitcoin short coming along? Yeah, Bitcoin capitulating. This can pick up speed into Monday, guys. This can get, let me show you exactly where this bounced. Right there is CPI, PPI. So the PPI came in, We read it as high inflation, but there was one factor. This is really advanced macroeconomics that we had talked about inside our sliding scales, but we didn't correlate with this bounce on Bitcoin. That is, headline inflation from oil didn't go into core, which is your everyday service economy. They were still very separated. Powell thought it would be the other way. That's kind of a bullish signal, keeping the two separated. Once this level gives out 62, that 60K resistance is going to be paper thin. We've been going down and retesting it. Bigger bounce, smaller bounce, and it's just like a ping pong ball that you dropped, getting ready to fall off the edge of the table. At that point, with that hard reset, now we're going to be ready to go with our swing trades. The next round, even more bullish. We'll get even more large runners. These are the averages from whenever these were just mentioned in VIP. We didn't even filter through with the macroeconomic triggers. This is just all the projects that we mentioned from February 6th to a few weeks after the PPI on May 13th. The all-time high had to have at least 6 hours for you to sell. So if it was just a giant wick to the upside, doesn't count. You had to have at least 6 hours to cash yourself out. And we can get a feel for how these bear market runners are performing. When this FOMC minutes actually hits, I'll give you guys another VIP trading plan that hasn't actualized its downside yet. VVV. This $10 level aligns with that April 8th pivot. You remember in all those FOMC meetings, it kept saying April, April, April. That's when we're going to restore all this liquidity. Even on the Velvet chart, when we scroll back here, that April 8th low, really, that's when the FOMC minutes was released. It really represented liquidity restoration and reviving the market. Ultimately, had we stayed more up to date with Velvet, which is on base, on BNB, this is for the government reopening trading plans. That's the ultimate government reopening. We would have been able to get in around 6.5 cents, which would have been a game changer, even for a side bag correlation. Oh yeah, Bitcoin is completely dumping. And this can increase undoubtedly. Here's the catch with durable goods. It's getting released on Thursday. It doesn't necessarily mean it's gonna be bullish. It could come out bearish. So there's that PPI. The durable goods in May was bullish, and it almost no bullish effect on Bitcoin. So this isn't a bad time to short sell Bitcoin, in my opinion. The DXY reopening is happening. It's not really trending to the upside, yet the unwind is taking place. And this definitely applies to Caspa as well. We've been sitting on the sidelines for Caspa because it's just been so bearish in the Fed. Caspa is one of our best charts. We have a very accurate history trading Caspa. We did the whole video showing I had to pay taxes on gains from Caspa last year during a bear market from using macro signals. Everybody else is like, oh, it's just falling wedge, it's this and that. It's not. It's all macros. So looking at the Bank of Japan rate hikes on Caspa, every one of them, massive downside. occasionally extending to the FOMC minutes. So we're going to want to be on our toes on July 8th, looking for a wick. Now, market-wide, here's my opinion on what's going to happen July 8th. The whole market's going to capitulate. Bitcoin is finally going to drop its 60K and start making its move towards these lower levels, 50 and 40,000. There's going to be a huge headline. Oh, the Strait of Hormuz is closed. Iran this, Middle East that. Adding to the bearish sentiment. Also, meanwhile, this is going to prop up bond yield. When it's risk off in the market, that's strong for the U.S. bonds, U.S. Treasury, Scott Bessant's account, which will eventually be rotated back in, favoring cryptocurrency, but it's, of course, all about timing. Right then, when that capitulation takes place, particular altcoins, very similar to this UB setup, which is today's top performing project. We plan the trade out 10 days in advance, and it happened to the word, to the day, to the dollar, exactly like we planned. We're projecting now a market-wide UB event. Everything's going down, man. Everything's going down. Just like this, and it's going to be a big opportunity for us. Everybody else, they're off in la la land. I don't even understand what they think they're thinking. But we're waiting with cash. We swoop in, save the day, catch the bounce trade on these huge wicks. So don't be afraid of that headline that we believe is coming in and all the fear that's going to hit the market, targeting individual projects. People will be like, oh no, see, we told you, Caspa dropping down to 2 cents. In the event that happens, it'll just be a big red wick with a rapid rebound. Just a huge wick with a recovery. And we're going to want to scoop that up and plan all of these trades out before they even touch down. That would have been epic to see Velvet start rallying at the DXY reopen. That would have been beautiful. But still has bullish projections for the durable goods and, of course, the labor market report. We do have a long time, guys. We truly do. We're looking at a super cycle, prolonged bull run that will extend longer than usual. We'll start gearing up into it right now. According to the Fed, this isn't like my opinion based on some artsy technical analysis or some fortune cookie riddle. We read every single FOMC document. And we get a ton of valuable insight from those documents. One of the most important ones was that April 8th. This is when all the liquidity had been injected back in the market. You can see that April 8th event was almost an elbow for the market, causing a bear market rally of sorts. With elevated energy prices causing global inflationary pressures, several central banks expected market participants to ease policy. Now they're expected to hike rates. That's your Bank of Japan carry trade. Here's another great idea that we've got inside VIP that I'll share with you guys. Bio. bringing this up. It had a huge reaction to the fact that the Bank of Japan didn't hike rates, and it really set up a great swing trade entry. Looking back here, this was the surprise PPI print on April 13th, puts it on our radar. We're putting together swing trades to grab it at 27, 28 hay pennies. The night before the FOMC meeting, Powell's last, the Bank of Japan says, we're not hiking rates. It was like 50-50 on Polymarket. Gets a bunny hop. There's a durable goods in the morning. It's bullish. So that's a go launch signal. The meeting comes out pretty decent. Easy double up. Looking forward, July 8th. Put this on your watch list. This can be your next UB. Crystal ball level to the day, to the dollar accuracy. And to get all of these put together, all these market updates and more information about my process, how we're gathering all this, how we're actually putting together this trade, because I've searched all over social media. I don't really see anybody that's as glib as we are about their results, because they don't have the results, because they're not using this method. Every twist, every turn, we're ultimately correlating 80% of these pivots, of these support and trend lines with macros. So you're not using macros, you just don't get the picture. So it's a great value in our group, particularly with this FOMC meeting coming up. Talking about the Fed's new insight, talking about the data team that they put together, right? The new Fed data gathering team. I can't even remember what they called it. That's going to be huge because they're going to change all the inflation levels eventually because they have a new updated way to gather data. They're going to say, oh yeah, the jobs were never this good. They were actually bad, or inflation was never this high. It's actually cool. And that's going to have a direct impact just from them changing the way they're gathering data. So this FOMC minutes, which is correlated with the market dump for the next UB trade for a potential red wick down entry on bio, good time to join VIP. This has had strong correlation with FOMC meetings, which is something Caspa did. Has ties to Pfizer. But this one right here, if we could get this 2 cents on a wick down or lower, that's gravy. That can, for one, immediately rebound to the upside, and two, give us a winning position that we can hodl. Looking at the results from February 6th to about 10 days after the May 13th PPI, we can see what sectors are outperforming clearly. For one, IP verification. This is a new trend within the AI sector niche. Worldcoin, not on this list, but Worldcoin is something that we had trading plans for within that time frame. That's a late breakout. Billions. Troll and bio. These are top swing trades, and they're all IP sector. Let's take a look at Worldcoin. Yeah, Worldcoin's having a really strong move to the upside late in the game. That whole sector of digital identity, fairly bullish. Digital identity. There was another project of interest here, Humanity Protocol. They unfortunately received a hack. Therefore, we didn't put it on a swing trade. See, right here, they got hacked. So downside, quick recovery, and now more consolidation. Was a contender for top IP verification. So we originally started covering Worldcoin when the Ethereum treasury company had a shareholder meeting at the Wynn. So you actually had to own a big bag of Tommy Lee's Ethereum treasury company. Guys that live in this luxury condo, and actually this grandma too, they all got invited. I wasn't in the group. They went there and they told me all about it. They watched the show. They provide insights. Some of these guys in the penthouse, huge stacks of cash, like 30, 40 years in the market. They said Sam Altman, Vitalik, and Mr. Beast were all at the Wynn speaking live. All three of those guys are powerhouses in their own sectors, and they all merged together. And one of the projects they were talking up was Worldcoin. Correlating this with our July 8th projections, we can get a high value pullback then. So any project that you miss that's running, you're going to want to track on July 8th for the pullback. The thing is about digital ID, it's just like meme coins in my opinion. You want to go with the top project in that sector. So if it's meme coins on Ton, you don't want to go down to the number 5 pick, the number 8 pick. You want to get in the top 3 because time and time again, they're just going to outperform. They're also on the top 3 for a reason. Worldcoin's the top digital ID project. Therefore, it's one that we want to go for. Based on historic analysis, Bitcoin's leg down, the altcoins leg down is July 8th. Just from adding these historic events onto the chart, we can see when the Bank of Japan hikes rates and the United States steps in and they change the dot plot, it's just a matter of time before the market crashes. The last time the US adjusted the dot plot was here. Look at this. We actually got a fake out on Bitcoin. That's the FOMC minutes, October 8th. There's your crash. Here, the Fed was initially planning on rate cuts sooner. They delayed them until September. There was a dot plot change here. And then, of course, historically, the Fed drastically pivoted the rates here, causing the market downside. It's getting close. So all of our patience, for those of us who have been waiting on the sidelines for this hard reset, we're going to be rewarded for that. You know the strange thing about Caspa, it's a store of value project, so it's really correlated with liquidity. That's one of the reasons, for one, our trading style taught to me by Roaring Kitty. You guys heard of the GameStop swing trade? They made a movie about it called Dumb Money. They only cover the surface of what was going on in the GameStop community. I was in Roaring Kitty's VIP group. He went to college for economics. I've pulled up my Webull trades for GameStop showing the results, kind of supporting this whole thesis. What Roaring Kitty was teaching us is, while we're looking at all of these stacked up short positions, there's also this incoming wave of liquidity from the bond market, heck, stocks and bonds, which even intermediate traders overlook the importance of the bond market. It just goes hand in hand with our price action, with all the Fed data. So for Caspa, huge correlation to the bond market, huge correlation to all of Roaring Kitty's teaching, which I'm passing on to you guys. Once I pop off my $10 million trade, I'm off. And then the torch is passed to you guys to continue sharing this stuff, which is very niche, but insanely effective. Caspa really connected as a store of value to Fed liquidity. Therefore, the weight that we have for the overall altcoin market, we're going to undoubtedly see in Caspa. And it's looking like, according to the Fed, remember, that's where we were just a minute ago, reading these Fed data points. The Fed is highlighting inflation will reach its 2% target Q2 of 2027. Now, there can be some like warm up. We're getting excited as inflation is trending downward, but the Fed can't step in with the fireworks show. They can't start stimulating the growth in the US economy that fuels these big bull runs that we're all waiting for, but we were robbed last cycle. There wasn't like a true blue bull run. So cryptos did your 10x, 20x. Meanwhile, the year before, during COVID, it was 100x, etc. We'll be returning to that euphoria stage in the event the Fed does get inflation down to 2%, and then they're able to stimulate a good US economy. Trump's taking credit for this, but who's the mastermind? Scott Bessent. What is he known for? He crashed the Bank of England. So he could run his own VIP course to a level that we couldn't even understand. Advanced traders using this method, he'll go over our head with niche bonds that they're tracking. There's like business center bonds, railroad bonds, hospital bonds, all this yields. They have just such a more advanced model. He could run his own school on top of ours for how they're setting up this huge bull market in 2030. Everybody's pretty angry at the president because He added tariffs, and then he went to war, adding this energy inflation. Ultimately, he may have a larger vision for market upside that's going to be delayed until 2030. So by crashing the market, for somebody who's sitting on a lot of cash, cool, do it. In fact, you would want to do that in the event you are kind of building and framing the market. Let's just crash everything down, scoop it up. What did Trump just buy? Marathon Digital. Indirectly, he's now part of the Caspa community because he owns that mining stock. I'm getting ready to sell some of my investment properties that haven't been profitable, right? Some of the weaker ones in my portfolio, and then roll that profit into Caspa, into Bitcoin, and Coinbase stock. Coinbase stock strangely performed very similar with Caspa. When we add these FOMC emojis, each one of the green ones are when Caspa had a breakout. Coinbase stock performed with similar liquidity signals from the Fed. More downside on Coinbase stock. I want to get this under 100. And let's not forget about this one. Circle Internet Group. It's been dumping. Perfect. We want it to dump, crash and burn. We'll come in and swoop this up on the low, and that'll be good. You can buy Velvet on Aerodrome. They have the highest volume. So just go to Crypto Rank. If you're wondering where to buy any project, go to Crypto Rank, go to Velvet, and then you can scroll down and see all the exchanges where it's on. You can also do that on CoinMarketCap. So Aerodrome has the highest volume, MEXC. For an add-on with Velvet, there are a lot of bullish signals here, but there's nothing wrong with waiting. In fact, using this kind of checklist guideline that will prevent us from top blasting, that will get us in low and give us the highest volume, bear market trading tactics. So when we're bearish, especially if you're a US citizen, you don't have a lot of access to short selling platforms. The Coinbase one is terrible. When you're holding cash, you're shorting the market. Example, when we made this Caspa post, we had cashed out of our Caspa up at this May 15th trend line. Me personally, holding that cash, waiting to DCA back end. Only enter on macro prints. When we're layering in, like we have a jobs report or an FOMC meeting, we can then layer in that Sunday and that weekend with additional singles. So let's say we wanted to short Bitcoin at this FOMC meeting, which was the trade, right? Here's the FOMC meeting. The dot plot comes out. You short Bitcoin, 65,000 Wednesday. You got a short trade. You're digging it. It crashed down. It's bouncing. It's up a little bit, but you're like, you know what? I only did $500. I want to beef up this short position. I want to put $2,000 in. Your opportunity to do that using this structure. For one, we're only entering at macro events. So we entered at that meeting. Worked out perfectly, and it will time and time again. Now, to layer in trades winning, our hypothesis proven, Bitcoin crashing. We are adding on now. specific sectors correlate to different macro data. Example, AI and the jobs report have been trending hand in hand. Obviously, we see that with Tau. We see it with Siren. The AI job displacement inside our VIP, we're looking at like really specific unemployment numbers that trigger AI growth. Then we're going to layer on that. So we've got all our macro stuff figured out, and this is our framework, right? We're building this house. We've got the boards in place. Now we're going to add some technical analysis onto it. Technical analysis, super important. Momentum indicator stochastics. It's an overpower indicator that I like to use. It's similar to RSI. What our trading journal shows is when we can get a bullish signal in the macro world and the 1 day and or 1 week time frame is fully oscillated to the downside, that's super bullish. Let's actually add this to UB and see what we get. So we can see how overpowered the stochastics is. When it's up, the price is up. When it's down, price is down. Was this an event? No. So here, example on UB, the jobs report comes in on June 6th. There was just a huge market downside. And we can see the stochastics is at a low. That's not an ideal trade setup. That's not one that we went for, but it will be something similar to that. You'll see BankerBot's even better example. On BankerBot, we actually are seeing classic patterns. We're seeing strong symmetrical triangles, things like this. Zooming in here, durable goods has been the breakout trigger. That's a durable goods print. Durable goods, huge upside, extended rally. And guys, this is important because this is the macro setup we're about to face. We've got a durable goods on Thursday. And then we got a jobs report after it. And guess what the economists are projecting? Bullish data. Now, this probably won't put a dent in Bitcoin, but it can for specific niches within the altcoin market. Depends on the data. We want to really hit these numbers flush. But BankerBot, right? Durable goods, we actually traded that. That's a trade that we took. Look at that triangle, symmetrical triangle. Now, our textbook technical analysis tells us the symmetrical triangle has a 50% chance of breaking out. It just so happens the apex of the triangle is forming at a durable goods print. Therefore, we can conclude in the event that data is bullish, that technical signal will break to the upside. I digress. This is only a pennant. To be a full pattern, it has to be like 2 weeks, 18 to 21 days in size. This was just a pennant, not as high impact. But nonetheless, the data came out, it's bullish, and we got our upside. Big picture, we can see that on the total 3. Giant falling wedge. And this was on Render, this same falling wedge. AVAX, Solana. What happened? It got down to a dot plot vote and they added rate cuts. Bullish. Breakout. We see double tops on the total 3 a lot with macro events. Dot plot vote here for the first top, and then the FOMC minutes, then the Bank of Japan carry trade and another FOMC meeting for the second. So boom, boom, even more clear here. They take a bunch of rate cuts away there, and then there's the minutes. So we're adding macros, but when we're adding the macro, we're adding the technical analysis, but we're adding it with macroeconomics. And now it's just like, boom. So if you're good at charting, if you're like, I'm a technical trader, I'm like Gareth Soloway, I got my trend lines, I got my patterns, I know the cup and handle, that's you. You want this because you're all of a sudden like an X-Men, next level power, particularly when you have a skill set in technical analysis, which in my opinion is extremely hard to teach. We have all the basics outlined that you can get in any textbook, but you kind of got to develop an eye for technical analysis. And then you get to these spooky level call outs like this 10 days in advance, where like it'll do this at exactly these days and it works out. Because the Bank of Japan hikes rates, it drops to 8 cents between Wednesday and tomorrow. Bank of Japan hikes rates, and that's exactly what it does with a strong bounce. And this is all going to repeat itself on July 8th. So what everybody's got to do right now with cash on the side that wants to get in on a favorite project like Worldcoin, they've got to start finding out how low is it going to go. Because the thing is, it's not going to lay down and let you eat it. You're going to have to jump on these because there's aggressive buyers. And we're really fortunate to have this example to show to everybody, because it's going to be the aggressive buyers that understand we've got a macro support level right here. As soon as it's in that range, I'm on it. For guys that are in VIP, we have all these tools for you. All these overlay indicators that I use on the charts with those emojis, they're already built Pine script editors ready to go for you. So you just add them onto the chart, whatever your favorite chart is, and figure out where that macroeconomic support is. To build these yourself, which you could do, it's going to take you 3 hours using ChatGPT. We've already got them all ready to go. So, boom. Velvet loosely fits the mold for the trading plans that we were looking for inside VIP for the prior May 13th trading plans. We were waiting for bullish data right here on May 13th, but it didn't come. It came bearish. So we knew not to enter any of these trades that we had planned out. We just said, oh, didn't go our way. In the event it had, there would have been all these monster breakouts across the board. Now, there's really two ways to approach getting in these swing trades. We can, one, buy on fundamentals and hold endlessly, waiting for our hypothesis to get proven, or wait for bullish signals from macroeconomics and then use that as an entry signal. As we explained earlier, had we really fallen through with this trading plan, the government reopened, very correlated with April. Remember how they kept expressing that inside of the FOMC minutes? Had we focused that on Velvet, we could have got a discount entry like the round of discount entries we're about to do around here. It's definitely got some life in it. But while the broader market sold off after the labor market print, this really started to rally up. And when you get a divergent signal like that, which is going to be part of the process we should all be doing for this July 8th unwind, we're already projecting VVV is going to crash to $10. Bio is going to crash to 2 cents. All these projects, just like UB, are going to have these massive wick down dumps. In our target projects that we fundamentally research, projects that are divergent to that, maybe even showing strength or just resilience, that's a clue that a future breakout can be taking place. And that's exactly what we saw on Velvet. We could have put together trading plans here for CPI on Wednesday. This was pretty fast moving, but ultimately, just like the lab trade, we get a huge breakout, and then that peak is later established as a new support. The initial breakout on lab, same time that bio broke out. The Bank of Japan didn't hike rates. Powell had his last meeting. The durable goods came in bullish. It spiked up here like a 4 or 5x. And even before that, it was ramping up. Okay, so it was down at 2 cents, moved up to 6 cents over the course of 30 days, and then ramped up. So that's kind of similar to what we're seeing with Velvet. From June 3rd to June 10th, a little bit faster on Velvet, it ramps up 4x and then breaks out. There's a lot of people on social media, on X, that are saying Velvet's the next lab. And we can see some similarities on the chart. The next signal is going to be reclaiming that spike as a new support. Market cap wise for Velvet, that's 700 million. Same exact thing for Siren. So there's that labor market spike when it gets on our radar, right? From 10 to 40, and then it starts ratcheting back up, getting higher until the next labor market print when it's already flipped that level into support, and then it goes parabolic. This is a candidate. It doesn't mean it's going to reach that level of maturity, but it's possible. Yeah, we're working on tons of everyone who's in VIP. We're going to be launching over the next 10 days, step-by-step layering in guides, capital management. That's all results orientated. Nobody wants to get some random experienced guy's information, although that can be extremely helpful. We want to get it based on data. We want to see, hey, should I be taking a moon bag? When do I start to take profit? All based on data. And a lot of this stuff like layering in, you can find this in any trading book. So we'll really be customizing that for altcoins, adding some additional stuff into VIP, including, and this is the one everybody wants to get, my process for how we find these gems. Like, how do we do it? How are we able to, what's the process? How are we putting together these trading plans? Like CFG at 13, that's when we started buying that. Troll at 5, Billions at 4. How do we get Siren at 12, right? How do we come up with, how do we put together, remember Zebek? We were the first people online to ever put together a trading plan for Zebek. So I'll be disclosing step-by-step guides for gem hunting, like what I'm doing to put together this trading plan. Now we have like the redundant part of it, the 84-point questions to ask AI about a project, the 24-point checklist, checking the wallets, checking the team. But before that, we still have to find the projects. So I'll be releasing that guide, which is going to be super high value. And eventually I'll probably break off and sell separately. But since we're in a bear market, we're just going to release it to all the members for added value. That reminds me, there are some new listings on Coinbase that we just put on the radar. We didn't squeeze off on these. We're waiting for a potential discount opportunity. Tokenized insurance, starting to round off, can drop. And then there was the other one. I can't even remember it. But there's new listings on Coinbase. This is pretty easy to do, to get all the new Coinbase listings. If you guys want to get those on your own, for one, you can join VIP because I'm doing this every day as part of my process, or two, you pay double the VIP amount and then you get like VIP access on CryptoRank. So you can filter through new listings and then you have to go through and hand select the ones on Coinbase. It's a process, but the regular CryptoRank is overpowered. But yes, we will be releasing new courses, which I'm drafting, which that's why I have all this data out. Just looking at everything we mentioned. These aren't correlated with entries from macro data, which will refine it even better. Just everything we've mentioned from February 6th to about 10 days after that PPI report. That's when we started crunching it down. So that'll be a high value, super high value program, gem hunting program, which I've picked up along my way from reaching out to other mentors. Throughout my 10-year experience trading, I've reached out to any mentor I can get my hands on. I've gone into these huge seminars on Las Vegas Boulevard. I got in touch with Roaring Kitty. I've gotten in touch with these hired guns that people hire out to do trading plans for their big channel. Like all these big channels, this is like the insane part. That face that you recognize, that voice who's talking about the market, they're not even doing their own trading plans. They're hiring out these hired guns. And through these guys approaching me, I've had interactions with them and then, offered, hey, I'll buy your course off you. Why don't I throw you some money and you show me what you do? So we've got good gem hunting techniques that I've picked up along the way that we're still drafting, but it's going to be good stuff. Now that it's a bear market, we're waiting for everything to unwind, right? In VIP, we're kind of waiting, right? There'll be some splash pots that we can take for jobs reports, right? There's Velvet, which is a candidate to run. But we really want to wait for the market reset and then start laying into it. So we got all that stuff coming in. We try to add as much value as possible for $47. It's a steal. Groups that are more expensive are far less accurate and provide a lot less. I should probably change the way that I'm selling it and charge more and segment this off. But this gem hunting guide, I will release to VIP, everyone who's a member now, and then later. It's so good. It's so good. It's got to be parceled off and then sold separately. as a gem hunting guide to altcoins, because obviously we've got the stuff. Like how we find, UB's not a great example, but how we find the gems before they get going. Send me a DM on Patreon. You just press the Jesse logo and you can send me a chat. The green eye, you just click message, you send me a message. That's how you can get a hold of me. So with Zebek, it was actually similar to CFG. Because we had Zebek on the radar for entry here. So there was the jobs report on February 6th. This is while tariffs were crashing the market. All of altcoins were crashing. And what we hypothesized was after the April pivot, these tariff-based projects, these supply chain management projects like Zebek, let me see if I can pull that up, because actually Zebek wasn't even the most bullish of the three. One of the other ones did even better. How crazy is that? Zebek was the most popular, but we put together 3 supply chain management swing trades from reading the FOMC minutes. It's talking about tariffs, tariffs, tariffs. Just like you guys remember the April 8th CFG, or how about the original river swing trade, right? Those are all based on FOMC minutes. So right there, April 8th, they started talking about credit. CFG does tokenized credit for Coinbase. That level obviously has become a support level for CFG. That's when the April 8th minutes kind of projected it would break out. It almost doubled up. WireX. That one was actually the most bullish. Yeah, look at that. WireX. So kind of a slow starter, goes from 10, just rocketing to the upside. What does it do? Supply chain management. Now there's some tips and tricks along the way. For one, whether you're using CoinMarketCap, CoinGecko, or CryptoRank, what you want to look for is trending. This is your go-to list, guys, particularly right after a bullish macroeconomic event, right after a Sunday DXY reopen. You want to go through and take a look at the top 50 of these. So what I'll do is I'll just take a screenshot. There's a bullish jobs report for the next 72 hours and that weekend. I just keep screenshotting the trending gainers. What's trending and gaining. Then I start going through it with a fine-tooth comb. I'm looking at technical analysis. I'm looking at fundamentals, sifting through them. That's where your winners are really going to be. This is a project I really, really like. You guys in VIP have probably seen the posts about it. This has got a really similar use case to Velvet. It hasn't had a really monster breakout yet. It's just kind of consolidating to the upside. Therefore, in the event we get a big wick down here on July 8th, this is something that I personally want to grab. Trade it on Kraken. Only on BNB, while Velvet is also on base, which is, I mean, obviously insanely bullish. Yeah, you know, Zebek, I could see you guys talking in the chat. Zebek has a lot of strength with ongoing tariffs. I can see somebody talking about UAI. UAI is something that I'm personally looking to pick up around July 8th. The use case here, almost identical. It's a DeFi for AI. Very similar to Velvet. It hasn't had its monster breakout yet it keeps wicking to the upside, which we know is bullish. We know that's looking good. So for me personally, I'm waiting for July 8th, and then I'm going to get a position in this, start layering into this. I mean, if it wicks down to 20 cents or below, I probably won't even layer in. I'll probably just get the whole position there. That will be a unique opportunity, buying the discount when we're usually trying to buy the breakout, which supports layering in. Discounts, kind of a different scenario. Yeah, this is ready to start. This is almost an ascending triangle too, starting to form, because we have a very flat support established at 40 cents. So that continues. Ascending triangle, very bullish. And once it starts to pick up, now you get your momentum traders. It's already recently been in the trending category, which means a lot of people are looking at it. It's ready to go. So this is a VIP trade. I'm personally looking at scooping some of this up. This one's been in the trending category for a while as well. This is starting to have a reversal. So just to show some of gem hunting, and then we want to go, here we go, Polychain Capital, Ethereum and Base. We already like it. So this one right here, definitely worth vetting. We're going to put that on our watch list. This is definitely worth vetting out. Let's see what its exchanges are on. It's on Binance. Yes, sticking with one project and using this macro strategy, like let's say you're like, I'm a Caspa maxi, I'll do a couple meme coins on the side. I'm just working on building more Caspa. This macro insight helps you a lot. Now, there's obviously discipline involved, dollar cost averaging into cash, waiting the market out for your prime example. But this Bank of Japan event, which fast forward became this pullback on UB, this to the day, to the dollar accurate thing, we've been projecting this was going to happen 90 days, right? We've been waiting for this market downside. There was a draft of the May 13th PPI report where we were like, sell everything and short Bitcoin, which we should have stuck with. This definitely works with one asset, and that's actually a good tactic. Let's say you want to trade Tau. Don't overlap those funds into other projects. Don't switch from Tau back to Caspa. It's either Tau or cash. You're either in Tau or you're in cash, using macroeconomics and patience to build a bigger position. The reason why we're so glib compared to a lot of other channels, I'm pretty sure they don't have the results to back it. They're kind of just firing and then aiming. This macro stuff, it's just so accurate. In the event you're not using it, you might be able to get there with technical analysis if you're really good, like advanced. But when you add this next layer onto it, it just unlocks an entirely new level. Like the PPI on Bitcoin. It's just insane. So huge event, guys. Huge event up and coming, and that is the FOMC minutes. Every time they have a dot plot vote, and then there's a minutes, throw in a Bank of Japan rate hike, the market is at huge risk for capitulation. Seeing back here, rate hike reduction just happened last week. So there was like trickle down, FOMC minutes comes, more downside, the Bank of Japan hike hit, and then it completely crashed out. More history of this exact same thing here. 2024, everything just started to rally. Everyone's going, woo-ha. The Fed, what did they do? At an FOMC meeting, they adjusted the dot plot, just like they did again, taking rate cuts away, shifting the dots on their sliding scale. Some downside, fake out to the upside, the FOMC minutes hits, and it crashes. Now, interestingly enough, the market will also connected under the Biden administration with the Gary Gensler attack on Binance, right with that FOMC minutes. And we'll see this time and time again. Looking back into the prior market cycle, the Fed did their huge pivot at the FOMC meeting there, and then they hit it with a regulatory, banking issues, starting to warm Gary Gensler up, right? They're putting Vaseline on his face saying, go get these guys, Gary Gensler. So here's the Fed, here's regulation. Here's the Fed, here's the minutes with regulation. Here's the Fed, here's the minutes, here's the Bank of Japan. And now it's all happened again. So one of those green emojis just popped up on July 8th. We're ready for full market capitulation, and it's my opinion, getting into real crystal ball stuff, kind of like this UB trade, which spooky to the day, to the dollar, came exactly true 10 days in advance. You can only do this with the Roaring Kitty GameStop trading method that I teach. You can only do this like with this method. There's no other way you're going to make this UB trade without the Bank of Japan insight. It will never happen. I'm predicting there's going to be some kind of conflict overseas or some kind of event that adds to market downside. July 8th with the FOMC minutes, right around that time frame. We actually saw that. Remember how we kept saying April, April, April inside all those documents we were looking at? What happened on April 8th? The day that we were saying, this is it, the whole market's going to pivot. The president did that big event and it became this like really suspect, shady Wall Street oil trade because the presidents did some shady stuff. I'm projecting that's going to happen again. And they're looking to capitulate the market, swoop in on the low, which is what we're going to do. For VIP members or guys looking to join just to get the FOMC minutes summary, which are so good, so juicy, and it's a must-have, showing the Fed's new data team, what they're going to do, how it's going to affect the market. It can show sectors and projects that are going to break out on the day. We're going to have all that, including the gem hunting guide which will later be sold separately during a bull market. And we'll have some money management tactics layering in using macro timing. This is basics inside any trading book. Layering in is as old as time. So we start at the macro event and then we layer in with confirmation over the weekend before the momentum trade really starts to break out. This, for one, allows us more flexibility, right? So we started a position in BSB late, not at CPI, but we layered in and we said, hey, we're going to pivot to waiting, pivot to a different project, because as you're layering in, you only have 30% of your target amount. If you get cut in half, you're only 15% down on your position size. How many positions should you be taking? It's in our nature to want to go all in. That's not a good idea. Of course, we're going to position this for maximum upside. It's not like we want to diversify into 10 swing trades, but having the ability to do 2 swing trades, never committing to an all-in, you're good to go. For one, this is going to give you more opportunities to hit a banger, and 2, it's going to protect capital, which is super important, particularly right now in a bear market. So we'll be going through all the courses, all the textbooks, and then customizing that to our data that we've extracted. So really high value stuff. It'll later during the bull market be sold separately, but you guys know it's good to be in a position of financial freedom. For myself, I don't even have to do YouTube. I do it because my daughter thinks it's cool. I can provide you guys this stuff and it's going to be a huge value for you. Really give everybody a relief from the nonsense and gobbledygook. The tactics that could never, call something to the day, to the dollar, getting the top trade of the day like we do time and time again. So super good stuff. I hope to see you guys in the VIP group. Until then, stay frosty, stay disciplined, stay in the right mind frame, and we'll catch you on the next one.